everybody. It is Monday, the 19th of August, 2024. This is my weekly recording of the vlog. There's some really good stuff in this week. I would definitely keep watching it. So let's get started. So we'll be looking at what happened in the trading last week and also a couple of pointers in terms of improving your knowledge. To kick off, I can tell you that we have now got over $1 million in stock buying power. So look out, market, here we come. So first of all, just to recap on how I get to the stocks that I think are good quality stocks in the right place. Value Line have a long list of about 7,000 stocks. They don't give a full report on all of them, and I'm only interested in the 1,700 or so that they do give a report on. And from those, I'm looking for the stocks that score well on three factors: timeliness, which I'm going to talk about later in this video, safety, and financial standing. So I'm looking for a timeliness score of 1, 2, or 3, safety of 1, 2, or 3, and a financial standing of at least B+. So B or C++ are not good enough. I then use the charts and indicators to eliminate about 170 of the stocks, and I come down to a full analysis of about 18. In many cases now, I've got the full analysis and I just have to update them. So it's actually not that much work. I then eliminate on quality and I get down to about 10 or 15 stocks. Then I turn to the trading platform and I look for potential trades. And you'll see the result of that in this video. And at that point, I'm looking to get down to 3 or 4. And I use the annualized return on capital employed to do that. I then look at them in terms of which is suitable for bringing into the fold for the long term and which are just suitable as short-term profit-making trades. And you'll see the results of that as we go forward. But first, a word about stock buying power. This short-term, close to the money put selling that I'm doing, it uses less buying power. So these trades use less buying power than the above the price, current price put sales that we do to acquire stocks. And we've seen now in times of sort of pullbacks, and we basically had one, it was not quite a pullback, but it was over 9%. The stock buying power reduces significantly. And that's whether or not we take any action in buying or selling anything. It just goes down. The brokers are looking after themselves. With such volatility in the market, they don't want to be left holding the can. So between the clubs this week, we have got, because the volatility is reduced and because we've now cleared a lot of puts that have expired, we've got over $1 million, 1,013,000 of spare stock buying power. Across the clubs, that's an average of 78.15%. And we like to keep 50% of a cover for unexpected events. But that figure of $1 million is above, it's over and above that safety level. The safety level at 50%, what I'm talking about there is I want to keep the stock buying power on the platform at least 50% of the net liquid value. That's my safety margin. Okay, so I'd like to point out some things to you in Value Line. I'll stop sharing this for a moment and we'll go into Value Lines, a couple of things to show you in there first. And here we are in Value Line. So everyone who has been on the TICN live training that we run, or if you've done the online version of it, then you're entitled, while you remember, to come in and use Value Line, an absolutely essential tool. I agree with Warren Buffett. No one should trade the American stock market without this. But a couple of things I want to point out to you. These funny little 3 bars at the top here on the top right, if you actually click on them, you get different information comes up. And one of the big ones in there is the market capitalization, but also the last price. We've got 3 to 5 year projected net operating revenues. We've got some really good stuff in there. The other band shows you, well, one of the main ones I'm looking for, which is the beta. Beta is a reference to if the stock market goes up by $1, what can we expect the stock to do? In this case, it's Etsy. I would expect it to go up by $1.4. I like stocks that go up faster than the general market, but there is a limit. It can get too volatile. So that's a useful little trick for quickly getting to the beta. Now, back on the main one that the page opens with, we've got these figures here. We've got the low and the high. These are 18-month target price range, call it a forecast, and the 3 to 5 year forecast too. They give a band, which is perfectly reasonable. However, I've done a lot of work checking these out, and at the moment, I'm not satisfied with them. But in principle, the further out of the future that a forecast is made, the more chance it's got of being wrong. And I would point you down towards the safety and timeliness score here. The timeliness score is actually a 6 to 12 month forecast, not of a particular price, but in the direction of travel of the stock compared to the rest of the market. 3 is average. 4 and 5 are below average. 1 and 2 are above average. So in this case, Etsy, the timeliness score is 3. In the next 6 to 12 months, it's expected to keep up with the market as it moves up. So that's good. It could be better, but at least, yeah, that's not going down. Now, the other thing is, when we look at these forecasts up on the top right here, we tend to ignore that little percentage figure there. And it's actually very important. And now I'm going to show you why it's so important. But before I move on, just one other little trick. You see this little double-headed arrow here? If you click on that, you get the timeliness and safety history. So you can see where it's been over time and how it's moving, and also the industry. In this particular case, the industry is internet, and that's really wide. I mean, it includes Spotify, PayPal, goodness knows what else. But nonetheless, for some industries, really useful. Okay, so a little more detail. First of all, on that timeless score, here is the definition. The timeless rank measures the probable performance of a stock relative to the approximately 1,700 other stocks covered by the Value Line Investment Survey. The Value Line Investment Survey are the stocks where they do a full report. But this is during the next 6 to 12 months. That is a forecast of the next 6 to 12 months. And also, if we go back to the usual forecast that we look at, that again, that top right, and that percentage, what we've got there is the percentage difference between the current stock price and the mid price of the range. And this is updated daily. The percentage may be thought of as the most likely, though of course not guaranteed, potential profit. The larger the percentage, the greater the potential price appreciation. So when you're looking at Value Line, just cast your eye across to that percentage. It's extremely important. So moving on. Of course, I'm heavily into selling short-term below the current price puts at present. I call it below the current price because the technical term is out of the money. But as the technical term for selling a call at a price higher than the strike price, that's also out of the money. So in some cases, out of the money is above the current price, and others it's below the current price. So I tend to talk in terms of whether it's just above or below the current price. So we had 50 short-term stocks. Well, not necessarily all short-term, but we had 50 short-term puts expiring on Friday. 36 of them, that's 72%, expired without being put, and 14, that's 28%, were put to the clubs. Of the 14, only 4, that's 8% of the 50, were in an overall loss position. That loss totaled $3,643. But it compares to the 97,200 gain that came. So all the gains added up to 97,200. The losses added up to 3,643. I know which side of the equation I like to be on. Of those losses, the worst was GT. I found GT to be a most unreliable stock over the years. 1,656 of that loss came from it. It was put to the clubs at $11, giving a loss after taking off the premium of $2.07 per share. The second largest loss was Sealed Air Corporation. That was $1,250. The put was $35 strike price, and it gave a loss after taking off the premium of $1.15. So both of these are easily recovered. The other two smaller losses were CTRN at $537 and Para at $520, even more easily recovered. Probably a single sale of a call would do it. And of course, in August, we're not yet complete. We've got 2 more expiration dates. So these figures will change again and hopefully will improve. So my filter results this week, I actually had a few more than this. I probably had a dozen stocks that passed all of the quality tests and where the charts looked favorable, the indicators looked favorable. However, when I went to the next stage of looking at the premiums available for selling puts, whether it's for long-term to get hold of the stocks or short-term for a profit, there was simply no decent premiums available. So here are the ones that were. So for example, we've got BP at the beginning, and a nice low stock buying power. So the stock buying power usage is estimated at $1,735 per contract. And for the long term, I would be looking at selling the October 35. It's only 34 now. It could take several attempts to get into this stock, but each one will make money. The 60 days to go, the premium is currently $1.37, and the annualized return on capital employed of that premium would be 48%. As far as a short-term trade is concerned, the short-term stock buying power usage was just a little bit less at 1,713. And I'd be going for the September the 6th expiration date and a $34 put strike price, very slightly below the current price. There are only 18 days to go. It's 45 cents premium, and the annualized return on capital employed of that premium is 53%. So worth doing as far as I'm concerned. As long as you're doing the trade with sufficient numbers of contracts to make it worthwhile. Looking across there, the long term, the best ones, I mean, none of them are terrible. Got Disney at nearly 61%, Gentex at nearly 57%, Nike at 91%, probably not quite ready yet, need to let that one fall a bit. PFE at 75, 76%. For short-term trades, then we've got the winner is PFE, and that's 85.68 annualized return on capital employed. You can stay at 50% plus on these. There's BP, Disney, and PFE all above 50%. So there's some of the stocks that I'll be playing with this week. A lot of the others will be existing stocks that instead of diluting through dollar cost averaging, I'm getting income into them through short-term put sales to get them into overall profit if they're not already there. And in some cases, even if they are already there and getting a bit more profit from them. Bit of news. I'm looking at starting a Facebook group. Be within the next few weeks, and my intention is to give a commentary on trades being placed and the thinking behind them, and a lot of other stuff too. It'll be a membership group, and membership will give access to a completely new, freshly written training program that covers exactly how we're trading at present and how we're doing so well. So look out for that coming soon. If you're not already a member of an investment club and you like what you're seeing here, you like the results, then get yourself across to myinvestmentclub.co.uk, have a look at it, see if you fancy joining us, ask questions, get in touch with the members directly, and you can come in with just £100 per month, all lump sums, 100,000. Some people put in 1,000, whatever. There's no real limits up or down other than that 100 per month. Live training, we still haven't quite sorted out the venue, but it does look like Watford. Friday the 15th to Sunday the 17th of November. Friday evening, we'll get some live trading in, 5 till 9. It's not on during the daytime on Friday. Saturday all day, Sunday all day. Saturday, we'll look at identifying quality stocks. Sunday, we'll look at trading techniques. And you can actually book these as individual bookings. So if you only want to come and get to see and get to know us, come on the Friday, you'll be able to do that. If you want to do the basics, perhaps Friday and Saturday. And if you want to get the cutting edge new stuff, then include the Sunday in your thinking. The Sundays when I generally do my presentations. Just a quick reminder about the book, still going well. But I am now in the process of preparing a new book, which will be an actual course manual on the trading, on the training, with quite a lot of detail in it, as well as a reproduction of the slides and so on. So that will take the form of probably a loose leaf bound folio, which you can use to replace pages, update, etc. So that's getting written at present. And that's about it for this week. So have fun. I've got a lot of trading to get through, and I'll see you next week.